So let's talk about the stock market and how the stock market works on a very aggregate basis. So think about the analogy of a novel being written. So let's take a mystery novel, for example. So it starts with a murder, and 400 pages later, it ends with a resolution. The murderer has been caught and the murder has been resolved. So that is a narrative, and it goes from point A to point B. And if the author wrote the story that way, it would be the worst book of all time. Nobody wants to read a story where they know what the ending is. So what happens along the way is that first you think that the wife did it, and then you think that the son did it, and then it's the neighbor, and the story swings from left to right, always keeping you off guard. Why is this relevant? The stock market is very similar to that. It follows a basic narrative. The narrative begins with the end of a recession, and it ends with the beginning of the next recession. That is the basic narrative of the market. And in between the beginning and the end, the stock market goes up. So the stock market bottomed in March 2009, and it continues to rise. And along the way, the market has swung. The market has kept investors off their foot or off balance the entire time. It goes higher, and everybody expects it to go higher. And when it does that, the market turns around and it falls 10%, or it falls even 20%. And then everybody thinks that the bull market has ended and that it's going to go back down to the 2009 lows. And then it swings up and it goes higher again. That is basically what the function of the stock market is. The stock market wants you to believe that it is always ending. And right when it convinces you that the stocks are going to go higher, that's when it turns around and goes lower. So why is this relevant? It's relevant in that people... There's a phrase in the stock market that the market and the economy are not the same thing. And that might be true on a day-to-day basis, might be true on a week-to-week basis, even on a monthly basis at certain times. But over time, there's no doubt that these two things move together. The stock market bottomed when the recession ended, and it continues to move higher. So that tells us something about how the stock market works. It tells us that if you want to understand where the long-term trend, you need to start by understanding where we are in the economy. Are we still in an expansion, or is that expansion ending, or has it already ended, and are we heading back into the next recession? I think that is the basic thing that every investor needs to understand.